Hello dear algorithms traders. We hear again and again on the internet that all you need to trade is a simple laptop to become a millionaire. To what extent this statement is correct, we will investigate in today's article. We'll also take a closer look at the Goldman Sachs approach and how to put together a good trading workstation. Over 5 million traders around the world sit in front of their laptops or screens every day, hoping for great luck. What most retailers don't see is who they're up against. These big players from large banks and institutions are very professionally positioned. In air-conditioned rooms, countless traders sit in front of the latest screens, which are supported by an armada of analysts. All information is received by the director of trading and his strategies are distributed as individual orders to the different traders. It's like an army controlled from one point to hit a specific target. They work with the most modern data centers to send their algorithms into the Forex market. Their strategies are brutal and designed to convey a truth to the 5 million retail traders that really doesn't exist. Many years ago I dealt with Goldman Sachs, one of the most successful traders in the world. You made profits on 222 days out of an average of 253 trading days. That is a rate of almost 88%. I also looked at their balance sheets and calculated profits and losses from them. Of 100% of the profits that they collect, they only have to give up 6.4%. The profit rate is thus over 93.6%, and that on average over the last 11 years. Their expected value averages $45 million per trading day regardless of whether they win or lose. The average profit factor is $20. That means they risk $1 for a win of $20. Those are incredible values. Since the big players don't work with stops, I determine the CRV value from the lost days. On average, the CRV value is well above 2. The hit rate in 2020 was over 90%. And the loss rate is below 10%. This makes Goldman Sachs one of the best traders in the world. In the past 11 years, the profit factor has decreased somewhat, but has now stabilized again in the last year. The CRV value has decreased slightly over the past 8 years. In the area of the hit rate, ever better values have been achieved over the past 5 years. That was also a little bit because of the pressure from the shareholders. At the same time, it has also enabled the loss rate to be significantly reduced in recent years. Due to different influences, the expected value has decreased significantly in the last 10 years. However, this was again increased significantly in the last trading year. That means Goldman Sachs is back in the game, even though daily earnings are still 21.5% behind the penultimate 5 years. Nevertheless, these are exemplary values that hardly any retail trader is likely to achieve. Why is that? First and foremost, there is a massive imbalance between the big players and retail traders. It would be comparable to a Formula 1 car versus a road vehicle. Of course, you could tune your road vehicle to have better chances, but there is always a special feature in the tuning. First of all, the engine output is increased, the vehicle should be as loud as possible, and the design should also stand out. In doing so, the safety aspects, which are much more crucial for a vehicle, are often forgotten. In addition to an optimally coordinated chassis, ceramic brakes and the right tires may be a decisive aspect in order to have enough safety reserves at the decisive moment. A Formula 1 car manages the sprint from 0 to 100 in 2.4 seconds and comes to a stop in 1.2 seconds. A Porsche GT3 RS manages the sprint in 3.3 seconds and comes to a stop after 2.3 seconds. A normal road vehicle goes from 0 to 100 in 8.4 seconds and comes to a stop in 3.6 seconds. No matter how hard the Porsche driver tries to tune his vehicle, he will never come close to the values of the Formula 1 vehicle. In principle, this is not necessary either. It is much more important that the Porsche driver achieves better values than the average road vehicle. And that is exactly the crucial aspect in trading. We don't have to be better than the big players, but clearly better than the average trader. In a race, the driver's driving style is more important than the vehicle. Ferrari hired Michael Schumacher back then because his driving style enabled him to get more seconds than Ferrari would have been able to with the best technical development on the vehicle. Therefore, in my next example, I will award a maximum of 20 points for the driving style and a maximum of 10 points for the vehicle. In the case of a multiplication, the maximum value is therefore 200 points. An inexperienced racing driver with a bad racing vehicle gets 50 points. If this inexperienced driver is provided with an optimal racing car, he can achieve significantly better lap times. The score increases to 100. A top driver with a bad racing car is likely to get the same score. The optimum value can only be achieved if a top driver is equipped with a top vehicle. Let us now transfer these points to a trader. An inexperienced trader will achieve significantly better results with a better workplace than with an unsuitable workplace. And it is precisely for this reason that the right workplace is a decisive factor in order to be successful with it. Of course, traders dream of making as much profit as possible, but unfortunately the reality is different. 90% of traders actually make losses. Having an optimal workplace is primarily about breaking even. And whoever achieves that belongs to the top 10% of all traders. If you were to tell the traders at Goldman Sachs tomorrow that they can only trade with a cell phone or laptop, everyone can imagine what the future success numbers will look like. For this reason, it should seem logical that a good trading workplace can only function with a permanently installed computer. In addition to the right operating system, the screens, the workstation, and the right accessories are also crucial. Today we will deal specifically with the operating system and the screen structure. We will then talk in detail next week about the composition of the workstation and the accessories. Let's start with the Apple operating system. At Apple, the individual components are precisely matched to one another. Apple attaches great importance to the design, which is always an individual view. The susceptibility to viruses and malware is significantly lower than that of Windows. When it comes to graphics and image processing, Apple is way ahead. The functionality and way of working with the operating system also have certain advantages. The communication between mobile phone, iPad, and iMac are second to none. Windows is clearly left behind here. The cloud is also perfectly coordinated with Apple products. On the other hand, there is a significantly high price, and to work with Windows, Boot Camp must be installed on the Apple computer. From my point of view, however, this is of no advantage. Let's look at the Windows operating system. Basically, Windows is much better suited for gaming, which is also indirectly related to trading. The biggest advantage are the individual components from which you can assemble a Windows computer. So you can combine the fastest graphics card with the fastest processor and the fastest SSD. Let's just think of the NVMe M2 SSD, which achieves a write speed of 7,000 megabytes per second. Apple does not achieve these values. Significantly more screens can also be connected to a Windows computer. On the other hand, the susceptibility to viruses and malware is significantly higher, which can be reduced with a few tricks. With individual components, graphics and image processing are also significantly faster. The range of software is also larger, as many programs do not run on Apple. Another important point for many traders is the significantly lower cost. This means that with Windows you get more performance and speed for significantly less money, and that is precisely what is crucial in trading. For reasons of performance, my choice would always be Windows. Monitor or TV, which is better? Basically, you have to know that monitors with 1 to 4 milliseconds have a significantly faster response time than TV sets. You also have a higher refresh rate, which is measured in the hertz. Monitors have a very high pixel density at 4K. In the monitor area, there are more smaller screens, and if you need larger screens, it can quickly turn into money. On the other hand, let's compare a TV that we use as a monitor. The response time is significantly slower at 5 to 10 milliseconds. However, this is not a major disadvantage in trading, since we are not dealing with complex video games. Likewise, 60 Hz are absolutely sufficient to be able to display the price courses effectively. Elaborate games are not possible with it, but we don't want to play either. We don't want to lose money on the stock exchange. With larger screen areas, the pixel density in 4K is of course lower on average than with a monitor. The larger the screen area, the further apart the pixels are. In the TV sector, there are significantly larger screen areas of 55 or 75 inches. And the costs are of course much cheaper than in the monitor area. You can get a good 4K TV from Samsung or LG from €1,000. For a comparable monitor you often have to pay 3 to 4 times as much. Anyone who uses complex video games is better off with a monitor. In the trading area, a modern TV is not a disadvantage. Hertz is the physical unit for frequency. In the case of a monitor, the number of image updates per second is expressed in hertz. In this case, that's 60 frames per second that the TV can display. The FPS translates exactly the same thing in principle. It is therefore only a matter of specifying a frequency, namely how many images a graphics card can generate per second. In the case of the RTX 2080 Super, that's over 200 FPS. It is important that the TV has a so-called V-Sync function, which limits the FPS to the rate of the monitor and usually ensures that the graphics card does not get too hot. You can get good 55 to 75-inch 4K TVs from LG and Samsung for as little as €1,000. There are other providers, some of which are significantly cheaper and also guarantee high quality. If you need 4 more monitors, I would recommend LG with 32 inches, as they represent a sensational black and white value. The costs are around €250 per screen with a flexible 3D wall bracket. Normally, an RTX 2080 would be absolutely sufficient for the 4K monitor, unless you also work with the same stock exchange software as I do, which accesses the GPU of the graphics card. This means that arithmetic operations can be carried out up to 10 times faster, and a larger graphics card proves to be advantageous here. The cost is around €800. I would supply the 4 LG monitors with 4 external graphics cards, as they put less load on the workstation. The cost here is around €200. The total costs for the screens, including the graphics cards, amount to around €3,000. If you buy used things you can save up to €1,700. Some traders have asked me why I am working with a 75-inch 4K monitor. The answer is relatively simple, because I want to focus my important charts on one point. This is a decisive advantage, especially in trading. However, my next large monitor will run in 8K. I work with 5 monitors in order to save time and not always have to change the charts. The question also arose that one is not able to see all the monitors at the same time. That is absolutely correct, but you have to imagine it as in an airplane. When taking off, you have other instruments in view, such as when landing or during flight. It's the same in trading. For entry I need different information than for exit or while I am trading. My charts are arranged accordingly. In my last post you can see the same spider web that was photographed from different perspectives. On the right picture you can see that in a certain perspective, the light reflections take on the colors of the leaves and the spider web becomes invisible to the insects. In the Forex market, the course history is the spider web. There, situations are created again and again, whereby the retail trader should get a secure feeling of where the price is going next. So we are regularly invited to fly into the big players' spider web. The big players are smart enough to suggest to us on a regular basis that there is no such thing as a spider web. Trading is incredibly difficult, otherwise 90% of all traders wouldn't lose their hard-saved money. But there is a way out that helps us traders, we just have to change our perspective. However, this takes some time and means a willingness to change. At first glance my developed trading screens look very complicated, but I don't do this for fun or because I have nothing better to do. I'm just changing my perspective to identify the big players' spider web. This information that I receive cannot be displayed on a cell phone or laptop. I hope that I was able to show you that a professional workplace increases the probability of winning significantly. In the next video we will go into the specific requirements of a professional workstation and what you have to pay attention to in detail. I wish you successful trading days until then. Kind regards, Michael.